So why don't people like infinite banking or any concept that involves funding a whole life insurance policy where the cash value is the priority and I'm looking at using that cash value as my own bank or as my own source of financing? Well, what I can say from experience is that it rarely has anything to do with the term infinite banking or bank on yourself, any of those concepts. Every single time I speak to someone who is upset or they felt burned or they're not happy with whole life insurance and they were initially interested in the product because of the term or concept of infinite banking, it has to do with the policy not being set up correctly. What happened is they got a policy, they wanted the cash value maximized, they put money into their policy, and then after they got it, they found out that it was not set up for maximum cash value. That'd be like me setting you up or selling you a whole life insurance policy, and I say, your policy is set up for maximum cash value. And then you go and speak with another agent and you get the exact same policy with the exact same company, but you've got more cash value from start to finish. What are you going to think? You're going to think, that Steve, he's a scumbag. He just took advantage of me. I had less cash value. This is your money we're talking about here. So that's always the issue. Here's how it works. Here's how we can prevent this from happening. It all has to do with the whole life insurance policy and how we set it up. To make this super simple, let's pretend that you're going to pay in $1 per year into a whole life insurance policy, and we've got options A, B, and C. Pick the one that you like the most. Policy A, you pay that $1 per year. Your cash value in the first year is zero, and it takes 15 years to get your money back. Policy B, you pay $1 per year. You see 50 cents in cash value in the first year, and it only takes 10 years to get your money back. More attractive than policy A? Yes. Attractive enough to make you want to put in $1 per year? Maybe, hopefully not. Policy C, you pay $1 per year. You see 80 to 90 cents in cash value in the first year, and it only takes you 5 years to get your money back, usually faster than that. And then you see a positive return on your cash value. Which policy do you want? A, B, or C? It's a no-brainer. We all want policy C. I want the policy where I see the bulk of my payment show up in cash value in the first year and I get my money back as quickly as possible. You know, every time I speak with someone who's interested in whole life insurance and it's because of infinite banking or they want to be able to take policy loans and use that cash value, what I always like to encourage them to do is before we look at the concept or before we look at taking policy loans, I'd encourage you to focus on the cash value and make sure that it's maximized. And we can look at our 3 most popular products with some of the top companies. You'll see some have more cash value up front, some have more cash value long term. But if we focus on maximizing that cash value, giving you as much as possible from start to finish, that puts you in a position so when you go to take policy loans and put this concept in practice, you'll have as much money as possible to work with. In short, you'll have more money. So when people don't like it, it never has to do with the term infinite banking. It always has to do with the policy not being set up for high cash value and people feeling like they were taken advantage of. Like that's always the case when we have conversations with people. So in short, for us to be happy with the policy, really what we want to make sure of is just that the cash value is truly maximized. If you'd like to see another video on this that really goes into details on how to maximize the cash value and avoid getting a bad policy where we might have buyer's remorse, I would check out this video here.